This is Craig Haugard with your Financial Issues Ag Update. Well, corn benefited from weather concerns in South America and rising prices in China to post the highest close in the spot futures that we've seen since August 9th of 2019. China's corn prices rose as the investment community bet on higher values because of the recent typhoons that moved through the Chinese corn production areas. That possibility drove the funds to be buyers of 25,000 contracts yesterday. The weekly ethanol production report showed an increase in production of 14,000 barrels per day over the previous week. Market year-to-date, production is now running 6.3% less than it was last year. Soybean prices were driven higher once again by great demand. On the export front, we had the announcement of yet another sale to China, this time for 261,000 metric tons. Domestic demand remains outstanding as well. Yesterday brought the September National Oilseed Processors Association, or NOPA, report. It showed that for the month of September, their members had crushed 161.5 million bushels of soybeans. Now, that's the largest number ever crushed in the month of September. On the South American front, Brazil's weather remains unchanged to slightly improved for soybean planting, although a quarter of the soybean growing area will remain without substantial rains if the current weather models are correct. It appears as if Argentina is set for some good rain accumulations with pretty widespread coverage. The wheat market traded higher on world weather and crop concerns. The Chicago December 2020 contract reached a price level not seen since December of 2014. Kansas City futures led the charge as they were driven higher by dry weather concerns for the hard red winter wheat crop. At the close, Chicago was 21.5 cents higher, Kansas City was up 22.75 cents, and Minneapolis brought up the rear with a 12.75 cent gain. Cotton futures worked back towards the top of their recent trading range, with the December futures finishing 29 points higher, settling at 69.22. Livestock futures were a mixed bag. We had the December live cattle ending the session 72.5 cents lower, while November feeder cattle were up 15 cents at the closing bell. Lean hog futures were stronger, with the December futures closing up $1.45. Class 3 milk futures set a new life of contract high, with the November futures 38 points higher, closing at $20.83. And finally, meat cutout values were mixed yesterday. Choice box beef were 66 cents lower, closing at $210.48. Select boxes were $2.77 lower as they settled at $196.50. Pork carcass cutout values were $4.85 higher as they ended the trading session at $101.42 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.